In personal injury law in California, there's a concept known as opening the policy. So that's opening the insurance policy. So whenever somebody gets into an accident or gets hurt, you can make a demand for the insurance policy limits, and sometimes insurance policy limits less than what you would hope they would be when you get injured to cover all of your medical bills and your pain and suffering and everything you've got to go through. So what happens is you send a demand to the insurance company, the other side's insurance company, for the policy limits. And you've got to give them 30 days at least to assess the claim along with the medical records and bills. And if they reject the policy limits demand and they reject it unreasonably, meaning that it's reasonably foreseeable that the value of the claim exceeds the value of the policy, then the insurance policy becomes open, meaning the lid on the policy, whatever the cap was, essentially gets taken off, and you can sue the other side. You've still got to sue the other defendant, the one that caused the injuries, but the defendant's insurance company can potentially be on the hook for the full amount of the judgment. So to give you an example, let's say you've got a policy limit amount of $50,000 with the other side. You make the demand, but the bills and records and injuries, the value of the case likely exceeds the $50,000, and you give the other side's insurance company at least 30 days to make a decision on whether they want to tender, meaning pay the policy limits. And if they don't, then you can file a lawsuit against the other side. And in that lawsuit, let's say the judgment ends up being $1 million. Well, the other defendant may not have $1 million, but the other side's insurance company is certainly going to have at least $1 million to be able to pay you. So the nice thing is, when it's an open policy, you're essentially getting the insurance company on the hook to pay whatever the damages are. So it's a great way to be able to exploit a mistake made by the insurance company in wrongfully denying a claim. And the whole intention behind it is to help make sure that you get the compensation you deserve if you've been injured and the other side doesn't have enough insurance limit. So you also want to make sure that you have a lawyer representing you who knows how to handle this, because there's a strategy to it in both pre-litigation, meaning before a lawsuit is filed, and then after a lawsuit is filed, and how the case gets litigated and ultimately tried. You want a lawyer who understands the whole picture, not just part of it or not just half. And a lot of lawyers in the personal injury space, unfortunately, don't litigate cases. They don't really understand this concept, and they're undervaluing their clients' claims and their settlements by literally millions and millions of dollars every year. Don't let this be you. Make sure you get a lawyer who knows how to handle both pre-litigation, litigation, and trial to make sure you get the maximum compensation that you deserve.